Happy Friday, Wealth Press subscribers. We're here for the Friday Market Weekly Wrap Up, and I'm joined by Roger Scott as usual. Roger, how are you today?
I'm great. Thank you for having me on, James. I was just telling you before the show how much I look forward to doing these weekly sessions because it's Friday and they're a lot of fun. I love doing them.
Oh, great. Well, as do I. Roger, the market seems to have started to respond negatively to the spike in coronavirus infections in Florida and Texas has now started to roll back some of the economic reopening. What effect is that going to have on our ability to make money in the market?
Well, I read this morning, Florida, Texas, and California. Last time I checked, three biggest states in the country. That's huge. And as a matter of fact, just to add to what you were saying, there were some concerts that were postponed in June that were supposed to happen. They were postponed till September, but then they said, we're going to do it in September because things were looking on the up and up. But now, again, they've been canceled. So it's exactly what you're talking about. This looks like a complete second wave, and it's very troubling. And as a result, it's almost like we're going back in time to February and March, and the same type of stocks that were moving higher at that point are starting to get a second rally up, and the stocks that were moving lower are getting more downside. In other words, the bank stocks, the financial stocks, the airline stocks, the cruise ship stocks, all this, it's like the exact same. As we could probably take a video from February, late February, early March, and put it here, and we would be right on the dot. It's like a part two of the same story. And yes, we are definitely seeing it, and it's getting scary because this time around, people are taking a different attitude towards it. The attitude now is, okay, well, what are we going to do? We got to deal with it anyway, instead of trying to be a little more careful. So it looks like it's going to be one of those mass immunization type of deals from what I'm seeing. It's bad, James. It's not. This is bad for the economy. The S&P 500 is literally sitting on the 200-day moving average with a descending triangle, which is a bearish pattern. GDP came out negative 5%. Unemployment data came out negative today as well. Not very pretty. Things are not looking peachy. Let's say that.
Yes, well, it's interesting. Globally, the situation is identical. And so, I mean, in terms of global GDP, I shudder to think what the actual rate is. The infectious rate globally has increased to 1 million per week now. And that is increasing still. And it's not even flu season in the Northern Hemisphere. So, I mean, it really sort of, you look out towards September, October, and we have the perfect storm sort of materializing for another Black October. And that does not bode well for the political process either, because, President Trump is under siege, of course, from the media as he is on a daily basis. But he doesn't seem to have any moves that he can make that will put confidence back in the economy. It seems the moves have all been made. The Fed has started to buy corporate bonds. What else is there? What can be done?
Well, and also you have to kind of look back and wonder whether there's a conflict of interest, Fed buying corporate bonds. How do they, it's getting very, coming from a legal background. Let's just say that when I hear things like that just smells trouble. There's just no way you can be objective. How do you pick the corporation? How many shares do you allocate? Who are you going to help out? It gets very, very messy. It's a very messy situation. And to add to what you were saying, the last time we had a presidential cycle, it was actually really interesting because the market typically without the presidential cycle calms down in the summer, cools off, and then, volatility moves back up again. The last presidential cycle, it was the opposite. We saw a really volatile summer, actually, and business was moving. People were spending a lot of money. Activity was strong. And then as soon as the summer ended, instead of picking up, it just died out all the way till after the election, which was it was not what we're used to seeing. And I'm curious how the COVID-19 is going to play into that in light of what you just said. Because look, this quarter right now, the one we just started, the earnings quarter, This is supposed to be the financial trout based on what we thought in for a quarter ago. So the earnings last quarter weren't bad because they still took into account some of the good stuff that happened in January, late December. But now you've got a double whammy, so to speak. You've got a situation where the numbers are just devastatingly low, and they're expected to be low. But now we're in a position where the upside is not as rosy as it was 2 months ago. So and remember, the market looks ahead. So unfortunately, what you and I are communicating right now to each other is a lot more indicative of the upside that we've seen in the last few months being a reaction and not a new leg up. And that's a very, very important distinction that a lot of traders are not seeing. They're seeing this as a new bull market, that was the end of the bear market, and this is a new bull market. The way I'm seeing it, and the way it's shaking out to be, and the way you and I are talking through everything, it looks a lot more like a bounce, and it just happened to be such a good bounce because the drop was so precipitous. I mean, it was huge. I mean, think about it. I mean, we dropped. The market lost. The Dow Jones lost over 10,000 points. When I started trading, the Dow Jones was worth less than 10,000 points.
Right.
So
is your expectation? Sorry, is your expectation then that the lows of March I guess it was March 16th when we really hit a low?
Right around that.
Expect those to be retested and possibly breached again?
Yes.
Wow.
Here's the silver lining. I'm going to tell you the silver lining. According to momentum levels, we are headed in that direction. The silver lining may be, and I've been thinking quite a lot about it. If you note, and I'm not changing topics, I'm just adding another layer to what we were talking about right now. The VIX, the volatility index, went crazy. I think it went to as high as 80. Okay. And I think the market, a chunk, and I don't have the numbers in front of me, but if you look at the dates, the last worst period of that drop that happened when that VIX spike, I think that might have been panic. So there's a good chance we will not go that low because the level of panic is not that high, because the investment sentiment has assimilated the fact that we're in a COVID-19 trading period, where in February it was like, what's happening? What's going on? We've never seen this before. Everybody already knows what's going on. I mean, the VIX is at 30 and people are thinking that everything is bullish. So people are definitely have assimilated their mind to where it was not in February. I mean, I'm looking at headlines, James, right now that we're in February, and just sitting back, T-Mobile closes 80% of their stores. I mean, if you looked at that on a regular day without COVID-19, you would freak out. That's scary. But looking back now, it was a bad period. So we may not go that low, but because the fear level will not be that low. But on a fundamental basis and a technical level, I think the market internals will reach those levels. So price action may not, because the fear may not be in those large cap stocks, those handful of large cap stocks. But when you look at it on an internal basis, there's a very good chance that the percentage of stocks can go from 70th percentile, trading above 50-day moving average, to 5% before we move back up. And that would cause the market to go maybe not there, but very close to where we were before.
Sure. So it sounds like the season of longer term puts might be in order to the short side.
Yeah, and interestingly enough, again, what's fair is fair. As we saw in February, the Nasdaq looks like it's very strong. There is a huge premium for healthcare, consumer discretionary, and tech stocks that are not part of the broad market, and that's going to remain strong. I really think, looking at things now and reading what I read today, 3 biggest states are having this virus, or this whatever it is. It's we still don't know exactly what it is. That's what scares me even more. We don't know what it is. We don't know 100% where it's from. We don't have a cure. We don't have a vaccine. We have states getting, what is really different? If you look at our environment from February or March, what has really changed? Tell me. Nothing. I mean, maybe I'm missing something, but on a people are still, it was kind of like a bounce. People were thinking, okay, the worst is behind us. The worst is behind us. Let's look ahead. Let's look ahead. Okay, now we're looking ahead, and it doesn't look that pretty. So I'm thinking, I really think we're going to be in a rut till we have a change. Change meaning accurate testing, accurate diagnosis, accurate prognosis, and a vaccine. I think the markets are going to be in trouble. Not all markets, and it's going to be the guys who can select the right stocks, the guys who can pick the right stocks are actually going to be in a better position. For example, my job has been easier the last few months. Very simple. I'll explain why. If you look at a raging bull market, you're going to have all stocks move up. Imagine the waves are 30 feet. They're going to push everything. They're going to move everything. So it gets harder to get a really good feel for a really good stock versus an average stock because they're both rising. But in this market right now, funds, large institutional funds, even retail investors are becoming a lot more selective, a lot more picky. So instead of 10 stocks going up, you're going to have one stock going up, but it's easier to find that stock because that upside will be meaningful and there's going to be more focus in it right now. So in my opinion, I'm not afraid of this market. I personally, Melly went up 500 points since we found it. Chewy just went from $30 to $55. It's a matter, the industries that are not affected seem to be moving along like there is no COVID-19. And the industries that are affected are just sitting at the 200-day moving average. So from a trader's perspective, I'm not afraid of this because this is not an economic downside. This is a medical correction. So the sectors, it's easier for a real trader who knows what they're looking for to find good opportunities because they're going to be a lot more real and they're not going to be confused with 3 or 4 other stocks that are just following along.
Right. So in that vein, then, have you got some top picks for this kind of market that are going to respond favorably despite coronavirus?
Yes, I do. And I have them here for you right now, as a matter of fact. So so people like, same reason you're on the farm. You want to get away from people. You want to be a little more in your own little world, right? Well, guess what? RV sales, James, RV sales are through the roof right now. People are buying RV sales. And one company is called Thor Industries, okay? Thor Industries, ticker symbol THO. People are all over this. In the last, they sell models in Europe and America. And people are turning to RVs. They're going to farms. They're going to RVs. They want to be in place of isolation. They want to escape. Positive earnings surprise of 200%, price target of $140 per share. And I think it's trading substantially below that right now. People don't want to go to airports right now. This is a way to travel and avoid the airports. All right. So I like the stock THO. Another stock, video games. Sporting events are off. People are staying at home. They have got money, but they can't go anywhere. They're spending a lot of time playing video games. Moreover, the whole video game industry is completely being revised right now by 5G. 5G is making virtual reality possible. So the games that we're able to play with 5G, we cannot do with 4G. Just like 3G and 4G allowed us to stream movies, Netflix. Mm-hmm. So this is a huge change to the whole business, to the whole video game market, not just one company. But in this particular case, I have one, it's called Take-Two Interactive, ticker symbol TTWO. 15 strong buy recommendations. Earnings estimates were up 969% over a year ago. 4 quarters beat expectations. Short-term price target, $175 per share. And both of these stocks are doing very well right now. They're either at all-time highs or completely have recovered post-pandemic and are completely moving to the upside of momentum. So those two stocks I really, really like right now. And I got one more industry and one more stock, if I may.
Sure.
Actually, two more, if I may, that I don't know if you've heard, but back around February and March, when this whole thing started, a lot of people went unemployed, without jobs. We had unemployment rate as high as the 1930s. You know all of this. I don't have to tell you any of this. Obviously, for our audience, a lot of people went home and spent a lot of time at home. And what people are social. People found that if they can't go to work, at least they could stay home with their pets. So you might have seen news stories about shelters running out of pets all over the country. People are turning to pets. It's my wife has a cousin who lives in up north, and she literally we had to get her a cat and send her a cat to Boston because Boston shelters were out of pets for the first time in like 50 years. And this was all over the country. Shelters were running out of pets, and right now are still, again, the trend is, again, we're going back in time to February. Pet supply stores, pet insurance companies, anything relating to Chewy, the stock subscription to food service for pets, almost went from 30 to 50. It was one of my calls. So this industry is heating up, and as long as COVID-19 is going to be around, the pet industry is going to remain very, very hot.
Right.
So again, you can make money in this time right now. So one stock is Trupanion. It's ticker symbol TRUP. They partner with veterinarians, and it's a subscription model for insurance pet care. Okay. They because they're on a subscription model, they have a very reliable cash flow. Now get these numbers. Total revenue, 111 million, increase of 28% from a year ago. Total enrolled pets in the program, up 25% from a year ago. Subscription business revenue, just subscription, up 21% from a year ago. And total enrolled pets from a year ago, up 14%. Stock is making all-time highs. Very, very good company. And another one is IDEX Laboratories. They do diagnostic for vets, software diagnostics. Company generated $2.4 billion last year and has customers in 175 countries. 40% of sales is from outside of America. Annual income is growing 20% annually over the last 5 years. 5-year return is 414%, and 5-year earnings growth is 144%, which makes sense on the 20% front. 3 strong buy recommendations, and the stock is off the charts right now, relative strength-wise. Ticker symbol IDXX.
Sounds like a great one.
Yeah. So these are premium picks, James. I'm giving them to you because I know a lot of people are hurting again because of this COVID-19. The key right now is to stick to industries that are doing really, really well because of COVID-19. Because, folks, we don't know how long this COVID-19 is going to be around. And by the way, each and every one of these 4 stocks was doing amazingly well before COVID-19.
So there's still money to be made out there if you're a Wealth Press subscriber.
Indubitably.
All right. Well, that's a great update, Roger. Thanks very much. You've actually lifted my spirits. I was all doom and gloom thinking there's nowhere to make money in this market, but you've proven otherwise again. So we'll leave it there for now, and I look forward to seeing you on the roundtable on Monday. Have a fantastic weekend.
Bye, and thank you for having me, guys.